Big news for Bitcoin ETFs. So, the U.S. Securities and Exchange Commission is currently deciding whether to approve some Bitcoin ETFs. Analysts are super excited and predict that if the SEC gives the green light, these Bitcoin ETFs could see a massive influx of cash. We're talking over $1 billion in just the next 3 months. And by the end of the year, it could be as much as $100 billion. That's a lot of zeros. What does this mean for Bitcoin? Standard Chartered Bank, a big name in the finance world, thinks that if these Bitcoin ETFs get approved, we could see between 437,000 and 1.32 million new Bitcoins being held in US ETFs by the end of 2024. They're even suggesting that Bitcoin's price could soar to around $200,000 by the end of 2025. That's almost double the current price. A little history lesson. The article compares this potential Bitcoin boom to what happened with gold. When the first US-based gold exchange-traded product launched in 2004, the price of gold skyrocketed over the next 7 years. Bitcoin has already been doing well, gaining about 155% last year and up 6% since the start of 2024. If the Bitcoin ETFs get approved, we might see a similar or even quicker rise in Bitcoin's value. What the experts say. Will McDonough, the big boss at Cornerstone Capital, is also betting big on Bitcoin ETFs. He predicts about $1 billion in inflows by the end of the first quarter of this year. He thinks that making Bitcoin more accessible to traditional investors could really shake things up, especially since Bitcoin has a fixed supply. Galaxy Digital, another heavyweight, expects that Bitcoin ETFs could attract at least $14.4 billion in the first few years. They're even predicting up to $39 billion by the third year. So, in a nutshell, the world of cryptocurrency is buzzing with excitement over the potential approval of Bitcoin and Ether ETFs. If the SEC says yes, we could be looking at a huge influx of investment and a significant rise in the value of these digital currencies. Keep your eyes peeled, this could be a game changer. What next? Bitcoin drives Ethereum to 32-month low versus BTC. So, Ethereum's Ether is going through a bit of a rough patch compared to Bitcoin. It's hit its lowest point against Bitcoin since April 2021. What's happening is that while everyone's super excited about the potential approval of Bitcoin ETFs in the US, poor Ethereum is feeling a bit left out. Here's a quick look at the numbers. Ethereum has lost a whopping 43% of its value against Bitcoin since September 7th. Now, in US dollar terms, Ethereum did rise by 41%, but that's nothing compared to Bitcoin's impressive 81% gain during the same period. On the other hand, Ethereum, despite its transition to a proof-of-stake blockchain last year, isn't getting the same level of hype. The total value locked in Ethereum protocols is actually lower than it was last April, even though its price is 10% higher. In summary, while Bitcoin is basking in the limelight with potential ETF approvals and the upcoming halving event, Ethereum is struggling to keep up in terms of its value against Bitcoin. It's a fascinating time in the crypto market, with Bitcoin clearly leading the way for now. Let's see how things unfold in the coming months. What next? The fee war in Bitcoin ETFs. So, there's a bit of a fee war going on among companies that want to issue Bitcoin ETFs. Just after all these companies revealed their fee plans, some started slashing their fees. This is a clear sign of how intense the competition is to attract investors if these Bitcoin ETFs get the green light. Grayscale's bold move. Now, here's where it gets interesting. Grayscale, which already offers a Bitcoin investment product, is not joining this fee-cutting frenzy. They're sticking to their higher fee, which is now even more noticeable after the recent fee cuts by other companies. Let's look at some numbers to get a better picture. Valkyrie cut its fee from 0.8% to 0.49% and even offered a 3-month zero-fee period. Invesco dropped its fee to 0.39%, matching Fidelity. Bitwise, already the lowest cost option at 0.24%, went further down to 0.2%. Despite these cuts, Grayscale is holding its ground with a 1.5% fee. This is actually a reduction from their current charge of 2% for the Grayscale Bitcoin Trust, which they want to convert into an ETF. Experts think Grayscale might adjust its fees later, but starting high gives them some flexibility. Grayscale might justify its higher fee because of its significant size advantage. They have over $27 billion in assets under management, AUM, even before their ETF potentially launches. In contrast, other issuers are starting from scratch. In summary, while most Bitcoin ETF issuers are engaged in a fee-cutting war to attract investors, Grayscale is confidently maintaining its higher fee. Their strategy seems to rely on their existing market presence and substantial AUM, betting that investors will see the value in their pricier product. It's a bold move in a competitive market, and it'll be interesting to see how this plays out.